everyone, my name is Tim, and today I'm going to be going over the monthly paying dividend gain, the Gladstone Investment, ticker symbol GAIN. I'm going to be going over its dividend yield, how much it pays out per month, and also some of its financials, and if it's also worth doing any options with this stock and monthly paying dividend. If you like this video, don't forget to hit the like and subscribe button down below. It greatly helps out my channel grow. Hope you have a great day and stay safe. So this stock has actually done decently. I mean, over the last year, it is down 12.21%, as you can see here in the chart. It does have a PE ratio of 18.66, a dividend rate per year of 84 cents with a yield of 7.04%. But one thing that is encouraging is you can see that it has gone from the low during the pandemic when it hit back in March, and it has recovered nicely since then over the last year. Gladstone Investment Corporation is a private equity fund specializing in lower middle market acquisitions, mature stage, buyouts, recapitalizations, refinancing existing debt, senior debt securities such as senior loans, senior term loans, lines of credit, and senior notes, senior subordinate debt securities such as senior subordinated loans and senior subordinated notes, junior subordinated debt securities such as subordinated notes and mezzanine loans, limited liability company interest and warrants or options. The fund does not invest in startups. The fund seeks to invest in manufacturing, consumer products, and business services distribution sector. It seeks to invest in small and mid-sized companies based in the United States. The fund prefers to make debt investments between $5 million and $30 million and equity investments between $10 million and $40 million in companies. The fund seeks to invest in companies with sales between $20 million and $100 million. The fund invests in companies with EBITDA from $3 million to $20 million. It seeks minority equity ownership and prefers to hold a board seat in its portfolio companies. It also prefers to take majority stake in its portfolio companies. The fund typically holds its investments for 7 years and exits via sale or recapitalization, initial public offering, or sale to third party. It was founded in 2005 and is headquartered in McLean, Virginia, in the United States. This stock is currently going for $11.94 as of the date of this recording on February 14th, 2021. It has an annual payout of 84 cents, like I mentioned before, with a 5-year growth rate of 3.13%. It has a dividend growth over the last 2 years. They do pay out monthly. It comes to about 7 cents per month. The only thing that I find a little bit disturbing is the payout ratio of 131.25%. That basically is meaning that they pay out more than what they receive in income, which I don't see how that can be sustainable long term. I mean, I know they've been around 16 years or so right now, but still, a payout ratio that high is a little bit concerning to me. Going over the company financials, so you can see starting back in March 2016 that their revenue steadily went up until the pandemic when it dropped drastically, which is no real surprise considering every company suffered during that time period. If you were to keep just the stock only in your portfolio, which I highly don't recommend, I recommend keeping your portfolio very diverse. But just for argument's sake for this, if you were to keep just this stock in your portfolio and you wanted $1,000 per month in income, you would need to own 14,290 shares with a market value as of today of $170,622.60 with an estimated annual income of $12,003.60, which would give you a monthly income of $1,000.30. Now I'm here on Robinhood, which I'm no longer really trading on Robinhood after everything that happened with GameStop and everything. I decided to move my account over to Tastyworks, but I like the UI for Robinhood in order to show what I'm talking about. It's the easiest way to show things that for like options and everything. It's the most intuitive to look at. So as you can see, they've been doing decently, like they've been coming back up from their decline back in early 2020. Options wise, though, I don't really recommend doing options with this. For one thing, the price of the stock is below what I usually recommend. I would set a minimum for an option stock of about $20 per share. So this is below that, but if for some reason you wanted to do it, it is still doable. In that case, what I would actually end up doing is I would sell puts as far out as I possibly could for a price I'd be willing to pay. So, for instance, if I really wanted to own 100 shares at this, but I didn't want to pay the current price for 100 shares of $1,195, and instead maybe I wanted to pay $750, so I would sell a put as far out as I could, because you can see in earlier dates you're just not going to get very much for selling the put. But if you go out as far as you can sell, for instance, a $7.5 strike price put for about $30 in credit. And so what that means is you would receive $30 if someone filled this option for you, and then before July 16th, if the share price for this stock dropped down to below $7.50 a share, you would be obligated to buy 100 shares at $7.50 a share, or $750. Now, granted, you would have received $30 in credit, so in reality, you would have paid $720. So you would be getting it at a much cheaper price than if you would buy it now. And if the stock price never got down below $7.50 by the expiration date, then you would be keeping that $30 in your pocket, and it would be yours to keep, and you wouldn't have to do anything else. The option would expire worthless. Thank you for watching. Hope you enjoyed the video and found this helpful and informational. If you liked the video, don't forget to hit the like and subscribe button down below. Like I said before, it does greatly help out my channel, and I appreciate everyone who watches my videos. Hope you have a great day and stay safe.